Hello, YouTube. It is time to say goodbye to February and hello to March. Sayonara, February. Let's go because we are closing red by 2.5% on the S&P 500 in the month of February. As we look here to the NASDAQ, or we're looking at QQQ, we're down by about 0.36%. So where the NASDAQ goes, the market goes. So for us to be very aware of where the S&P could go for the month of March, we're going to look at a couple of really important charts. So please make sure to stay tuned all the way till the end of the video if you want to get all of that insight. It has been a tough month. So the first thing I want to say is that if you've been having a hard time so far this year, don't worry. The market's red. So if you're a red too, it doesn't mean you should get complacent. The saying we like to use is that it is okay to be wrong. It is not okay to stay wrong. And if we look at this objectively by deleting everything, we look at, okay, well, inverted hammer, failed breakout, that's usually bearish. Let's look at the volume. Well, it's pretty much on par. So no confirmation there, no big volume flush yet, but there are clear levels for us to look at here. Roughly 409, and then I would call it roughly 395 as a pivot, and then roughly 380 as the low. All of these levels are going to be very important. So let's go through and understand the reason why. Here's what I think. With a failed breakout and us being below 409, with my original call out of us going back to as low as 378 or about 380, well, it's looking like if we form another lower low, we could be headed there. I think this is going to be a pivot, which is the reason why it's pink. And here I'm looking to the August low. So after we print another lower low, it usually leads to more downside. Same thing here, right? Low, lower. That's just how it works. So if we keep printing lower lows, let's just expect that the risk reward is still skewed. What we have to ask ourselves now is the risk reward changed? Well, it's 1 to 3 when we fall below 409 because there was about 30 points of downside and there was about 10 points of upside. From where we are right now, the red line for me at about 410.64, which originates on our February low, is the area to watch for resistance. That's going to be that roughly 409 area we're talking about. On the flip side, I see support here at about 385, but really it's down here at about 380. So what's the risk reward now, Justin? Tell me. All right. Well, if we go 410 minus 64, let's just see what those numbers are here. It's like going to be roughly 15 points. It's about 15 points. So we can make about a 1.5 if we're team bull, right? Team bull. There we go. Team bull. And then what's the bear risk reward if we're going to go all the way back down to support? We're looking at about 20 points, 15 to 20 points. So let's call it, I don't know, 15. So it's about a 1-for-1 risk reward. So we mentioned before that it's okay to be wrong, but not okay to stay wrong. From right here, right now, as we're closing out the month, it's roughly 1-for-1. I don't know if the low is going to hold. It's just February 28th. We'll see what happens on the 1st. I'll show you some clues in a moment, though. So what does this tell you? It tells you if you're on the wrong side of the trade, be prepared to double your losses. Or right now, there's not really a significant advantage. There's team probability and then team risk reward. Team probability, meaning what's the odds? The odds are that if we print a lower low by getting below 39364, the odds are that we're going to go lower. Is there the risk reward to justify it? If we manage the trade correctly, yes. But purely from where I believe the monthly chart changes at about 410 down to support at about 480, I'm seeing a 1-for-1 risk reward, which means that for every $1 we're risking, we can make about 1. I don't know about you, but I mentioned this before. I like to think of it like stealing candy from babies. I don't like stealing candy from grown adults. What are they going to do? They're going to fight you. So we go over to we're walking through the park. We see an abandoned baby in a nice little cart. And we're like, oh, it's sucking on a lollipop. I'm just going to go steal it. I like getting 2-to-1, 3-to-1 risk reward trades, sometimes even 10-for-1. 1-for-1 just means that we're fighting. I don't want to fight for my money. I want my money to work for me. So if we print a lower low, team odds is that we're going to keep going lower until we what? At least get back to green on the month. Why is this 393 area so important? Let's remind ourselves. So we got 39364. Let's have a look here at our daily chart. So we got two competing patterns right now. We got our inverse head and shoulders and our head and shoulders. So let's delete everything and make it simple because I want to make sure we hear the story. We see the story here. Let's flip the full candles too because, man, it's been like a pretty relentless fade. So ever since our high up here at the 15th of the month or halfway through the month, red, 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 red. The green days are actually full. What does that mean? We closed lower than we opened. Really? Yes. So there has been basically no support ever since the 15th or the second half of the month. They're either all red days, right? Every single one here is red. Some are hollow, some are full. Doesn't really matter. I'm just looking at the theme. It's been selling. It's been a staircase down. So normally we take the elevator up and we take the staircase down. So we like ratchet up support, ratchet, 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 ratchet. That's not what we're doing here. We're taking the staircase down. That's like really interesting. We now have one day below, one day above the 50, another day back below. There's a lot of supply and demand happening here. Here's what I don't like about this chart, and what makes it really simple. If we pierce the 200-day moving average at 393.13 currently, it's not really going anywhere. It's pretty much going sideways. What does that mean? Well, it means that as we look here to our monthly chart, we got that monthly lower low. It's that simple. So I know a lot of you are never going to look at the monthly chart or don't look at it often enough. So just know, if we print, even just print it, not bounce. If we print a weekly lower low below 39364, that means we have another weekly lower low, right? We got 1, 2, 3. We got two lower highs, sorry, and we'll have 2 lower lows. We're going to be going into a monthly lower low and a lower high, and we're going to be below long-term support on the daily chart. That's like bearish for all time frames, daily, weekly, monthly. But it doesn't really feel like it because we're not taking that elevator down. We're just stair-stepping lower. So if we print below the 200 DMA, and as I mentioned, I'm not talking about a bounce. I'm talking about if it just prints, it'll likely self-manifest. And if you guys wouldn't mind just taking a second to please smash a thumbs up and consider subscribing to the channel if you haven't already, I would greatly appreciate it. All right, let's go through a couple more quick charts here. So I think I laid out the case pretty clear here. Right, our downtrend's holding, it's solid. We don't technically have a trend change yet. We're actually going up, and we stop going down until we resume below this trend, which means below 390. So yes, it'll be found out in hindsight what's really happening. Here's what I find particularly interesting, though, and the reason why I want you guys to watch all the way till the end here. Why? Well, look here. We got 377. Let's actually do this instead. So I'm looking for about 378, 380. Let's actually delete everything and go to a 12-month chart. Why? This is an annual chart. It smooths the data out so easily for me. And I had this laid out in a Twitter post, but I'm just going to go through and do this here now instead. Why? Because this should be like really simple. So we went higher to start the year off. If we go below 378, or if we don't bounce off 380, what does that mean? Well, there's resistance here. That's what it means. We're going to have a shooting star here on the annual, or an inverted hammer. Whoa, yeah. That's not good. 378.46 is our 2020 high. So what could happen? Maybe we could start fading lower, which was my original bear market bear thesis. Sorry. So like this is like really important to me. The 12-month chart, but people won't have the patience to wait for another 10 months to see what's gonna print. Now let's look at one more chart because I think that understanding what S&P is doing is good. It's 500 stocks or the broader strength of the market. What's the NASDAQ doing though? Well, the NASDAQ here has the head and shoulders. Are we looking for knees and toes? We're not red by very much on the month. And we've already gone through and talked about how, RSP, DIA, NYA, meaning equal weight, Dow, NASDAQ, Russell, Tech, chips. They all have monthly fail breakouts, even the DAX now. So we don't have to look at any of those. I've tried to go through before I hit record to present you with the best content. So here we have a clear level at 290.05. We pierce below 290. We're probably going to self-fulfill and go lower. It's not that much lower from here. In post, we're at 293, which means that in after hours, all we need is about another 1% knockdown, and we got a monthly lower low. We're also throttling this Fibonacci area. So after we can hold the Fibonacci area, which is a retracement from our all-time high to our 2022 low, the next support is at a full retracement or zero, which means retesting the October lows. That's what it means. So please be very aware of it. Why? Well, because as we look here to the most important things for me, if you're watching here, I have a YouTube list. I got these symbols at the top. They're the most important ones. What do we have on the dollar? We don't even have to zoom out. Just look. It's a massive bullish pattern. We're up by 3%. It's almost a bullish engulfing. It's right near the high of the session as well. Yes, there is a head and shoulders inside of here, but we're set to close near the high. And if we can get above about 106, I think there's room for it to squeeze, which would hurt stocks. We look here to the VIX. VIX is green by about 7%. I'm still not sure if we're doing a W or a head and shoulders, but I'll show you something here. I actually had a bit of a story I forgot to tell. Markets are coming to terms with the higher for longer from the Fed. Okay, we talked about the GDP revision too. So was that the recession last year? Man, the Fed looks like it's going to have to go higher. Why? We're just not cooling off. So talking about the VIX and the move that we have here, Oh my goodness, right? They are buying up the VIX like you wouldn't believe, right? They're buying it up as heavy as they were going back to 2020, which is a known catalyst. Everyone knew about it. So VIX average daily call option volume, which means we're seeing an increase in call buying for VIX, which means people think VIX is going to rocket. They're thinking we're going to do a W. I'm not 100% sure yet, but that's what the market's doing, right? We got to pay attention to where the market is flowing, where are the flows. So there you go. That's interesting. We look here to another note from Mike Wilson, quadrupling down or whatever, testing critical levels. Given our view that the earnings recession is far from over, we think March is a high risk month for the new leg lower in stocks. Ultimately, we think this rally is a bull trap. That's Mike Wilson from Morgan Stanley. Looking at another one here. This is from Bank of America. They see a recession in the third quarter of 2023. B of A's base case, or most likely scenario, is that a recession will start in Q3 of 2022. Why does that matter? Well, remember the way this is calculated is it's based on the previous numbers. So the higher we stay, the harder it is for each additional quarter to beat. So we keep ratcheting it up higher and higher and higher. As we look here to the 1 month, as we looked at yesterday, the two pockets that are interesting to me are a little bit of tech, like notably Apple, Nvidia. We got Meta, we got Tesla. That's about it. Everything else is like already pretty red, right? Fading. To look at year to date, it's still holding up. But where I want to focus is going to be on the two largest stocks in the entire market. Here we're going to go to no group, and it's going to be Apple and then Microsoft. Why? Same reason. Let's actually go through these last charts here. So 2-year chart, bullish engulfing monthly candle up 15%. Oh my goodness. 10-year chart, bullish engulfing monthly candle up 12%. Incredible. Then we look to inversion. Oh my goodness. All-time high record close. Yes, not an all-time high, but all-time high record monthly close. Yes, highest level going all the way back to the 1980s. I was born right here, July of 1988. Nice. So I've never seen this kind of volatility before. All right, so take it home, Justin. Let's look at those last few charts. Let's do it. Let's look at Apple and Microsoft. Why? Man, if we're looking for direction on where the market's going to go, the king or Apple might be it. It doesn't have a failed breakout yet. It's above last month's high at 14723 by 19 cents. Oh my goodness. So can Apple drag the market higher? The saying is that where Apple goes, the market goes. So I'm paying extremely close attention here. Why? It's actually still even green on the month. And here is the last one. It is Microsoft, or the second biggest stock in the entire market. It's up by about 0.65%, or two-thirds of 1%. Man, that's a gravestone doji. Yeah, it's a gravestone doji, but is it a failed breakout? 24983, 24942. Yes, that's the failed breakout. Only by a couple of cents, though. I would say it's close enough, but it's in that failed breakout crew. So what does this mean? It means after their big hype of the ChatGPT, their investment, right? Whoop, and then fade it. So that looks like a buy the hype, sell the news. If we can't resume higher on notably Apple and Microsoft, when the rest of the market is already lower, that is what I think is going to cause QQQ and tech to fade. So if you enjoyed today's video, please smash a thumbs up. If not, there should already be that weekend video queued up over here on the left-hand side. I encourage you to watch that. If not, thank you so much for tuning in. I'll see you tomorrow. Thank you.